They have Nordic tracks, but they will not catch these people if they whisper into the phone. And these are always these long shots. These are the stocks that are going to grow hair and make your kid have better spelling, and your breath's going to improve, and you won't have to iron your pants. It's one of those stocks, and they always do everything for you. But they're missing. They don't have any sales yet. That's the missing element to the story. The story is sensational. There's no profits here, no sales yet. But my God, if this works, it's going to be the next Xerox. And it's going to help Murr and space and everything. It's a very, very good deal. Now, this is not a long shot. This is a no shot. You have to separate these out. I've tried 30 of these. I have never broken even on a long shot. Never. I've made 25, 30 times my money on some stocks. I never thought about Sallie Mae or MBIA or Fannie Mae or some of the banks or Stop and Shop. I'd make 20 times the money, 30 times the money. I had no idea. I thought the stocks were going north. I had no idea. You look back 10 years later, you say, my God, I made a lot of money in this thing. The ones I went into thinking I could make 4 times my money, I've never broken even. So don't do the long shot, guys. They don't work. They simply don't work. And again, if a stock's 3 and it has huge potential, write down the story, take the stock symbol. If it's going to 300, it's okay to buy it at 15. Check in later. Check a year later. See if it's still listed. See if you still get a quote on it. See if they still have any earnings yet. But if it's going, write the story down. Some of these work. I haven't heard yet, but maybe they will work. But it's worth tuning in 6 months later. Don't buy it then. Importance of management. Management is the single most important thing in a company. But for an outsider to know great management versus good management versus terrific management versus average management, tough to do. Tough to do. Because you only get an hour at people, sometimes a half an hour. And how do you know what decisions they didn't make? A lot of great companies have been made because the company didn't make an acquisition. They didn't get rid of the division. They don't put in the annual report, we didn't get rid of the tubing division. You don't hear about that. Somebody made a brilliant decision, we're going to hold on to that thing, we're going to fix it, and it's doing great. Now, they might be doing great because some management 8 years ago did it right, or some did something right 5 years ago. That person isn't there anymore. Or they didn't make any acquisitions, or they expanded at the right time. So knowing what they can add to it, it's the single most important thing, very hard to measure. I've always said, I'd like to have a company any fool can run, because eventually one will. And you really want to do that. When I bought Toys R Us, they had the formula right. Any 4 people in this room and me could have run Toys R Us. We wouldn't have done as well as they did. They're spectacular. But for the next 15 years, we had no competition, we had a great formula, we could have rolled with it. They probably would have done 3 times as good. They were the frosting on the cake, but they had the formula right, no competition, the department stores know what they're doing, there was no copycats, and they were going to just roll for the next 25 years. Same with Circuit City. So I want the story to be solid. If management can add anything on top of it, that's great. I want to buy the story. Assume management leaves the next day, and they're replaced by the next generation. That's fine with me. If management can add something to it, that's great. I'm not going to buy it because people say they have great management. Because you'll notice great management is always attached to stocks been up the last 8 years. You ever notice that? Because I looked at Reynolds Metals. I used to follow Reynolds Metals. The stock has had the same person run it for like 30 years. When the aluminum was tight, they'd say Reynolds Metals has great management. Aluminum going oversupply, these people are idiots. Then aluminum get tight, they say these people are terrific. I mean, it all to do with the price of aluminum. And they keep rating the management by how the stock's doing. It's very hard to measure management. It'd be wonderful to do. If you could spend months with them, really see them in action, then you'd know, but you don't really get that chance. Be flexible. People have all these biases, all these prejudices. They want to buy high growth industries, they won't buy financial companies, they won't buy savings and loans, they won't buy companies that start with the letter R. I mean, there's all these rules. They all hurt you. There are great stocks everywhere. There are stocks that are near bankruptcy, stocks in bankruptcies, stocks about to go in bankruptcy. There are companies on the new high list that are attractive. There's companies on the new low list. They're all over the place. They're in growth industries, non-growth industries. Don't cut yourself off to one segment. People have way too many prejudices, too many biases. And I always thought of it, I don't know if the women in the audience see this many times, but I always thought of these buy lists at some institutions. We don't have this at Fidelity. They have these buy lists. I think Kmart got on some of these companies' buy lists 3 years ago. Microsoft may get on it about 12 years from now, but they have these buy lists. And I always thought of the buy list as, you buy a new shirt, You ever look in the pocket and you get inspected by 6 or inspected by 8? Do you ever see those numbers? I mean, I always wondered about that. I always think of those buy lists at those institutions, so I see that inspected by 6 and inspected by 8. In fact, I'm absolutely, if somebody call me, you could do it any time of day. Has anybody ever got a shirt inspected by 1? I mean, do they retire these numbers? They have a meeting. I've never had a shirt inspected by 1 or by 2. I think they must they raise their numbers in a meeting up to the rafters. But I always think every time I get that number in the shirt, I think of these people working off a buy list of rapidly growing companies, only they have unit growth rate of X or 6X or whatever the number is. It doesn't work. Another thing about it is math, and the kind of math we need to do this. I don't use a computer. I don't have a computer. I really was doing great math. I remember 7 times 7 was 41, and 9 times 9 is 81, and 12 times 12, I think it was 144. So it was some big number anyway. I had that one down cold. And I said, this is great. I love this stuff. And the barge left St. Louis going at 8 miles an hour, and the train left Pittsburgh, and this stuff is easy. I remember one day, I think it was 9th grade, it was a grim day. Somebody introduced cosine. God, that day, I mean, remember cosine? I mean, has anybody used cosine the last couple of years? I mean, let's have a show of hands. How many of you have used cosine the last 6 months? But I remember tangent and cotangent. Why would you want to know about tangent? And then remember the area under the curve. I mean, remember that crazy calculus area under the curve? I mean, what the hell would you want to measure area under the curve for? That is such garbage. You don't need this for the stock market. If you can add 8 and 8 and get fairly close to 16, that's all you need. You say 400 million in debt, no equity, no cash, losing money, forget it. They get 300 million in cash, no debt, 200 million in net worth. They're losing 10 million a quarter, but they'll be around. That's all you need. That's all you need. That is not that hard. If you made it through 5th grade math, you can handle this stuff. And I had a roommate in the Army, and it's a story I always remember. He was talking about, he went to this very good school in the South that I won't tell you the name of it, but it's in Atlanta, and it rhymes with Roger Reck. And they had this, my hero at the school was a very good football player. This is my friend, my roommate, telling me the story about this guy. He was a freshman at this great school. And he'd go to the line of scrimmage, and they'd change the play. He couldn't figure this out. I don't know if you realize how complicated football is. Half the plays are changed at the line of scrimmage. It's about 300 plays. You go out there thinking it's a run to the right. It turns out it's a screen pass to the left, or it's a draw. All the blocking assignments have changed. All the passing's different. You have to instantly think, new play. What do I do in this new play? Just like that, and do it. He could not handle these deals. He says, give me the ball, I'll tote it. And he'd go for about 8 yards. He was really good at this. Now, this is not why he's my hero. The reason he's my hero, in a classroom about this size, his freshman year, he asked the question, does X always equal 7? Now, he never made it to the second semester. He never made it to the varsity. He never made the NFL because that damn X, he never could figure out X. Now, I always thought at the UN they could resolve what the hell X equaled. They could say, if it's 247 and a quarter, they just finally resolve what X was. We could save all this time and do something useful. You don't need it in the stock market. But, okay, now we'll get to the important stuff. There's always something to worry about. This is the difference. This is what happens in the stock market. Because, see, everybody's got the brain power to do well in the stock market. The question is whether you have the stomach for it. That's the key organ in the body. There's always something to worry about. I went to school, grew up with a kid in the 50s. In the decade of the 50s, there's this big theory that the Depression was caused by a stock market crash. Totally wrong. Less than 1% of Americans owned stocks in '29. We had this big-time recession. In fact, it was a depression. It wasn't caused by the stock market. The economy went down, the Federal Reserve raised interest rates, and we had a big-time depression. In fact, we had several depressions like that from 1850 on. This was only one of about 8 depressions since 1850. But people thought the only reason we got out of the depression was World War II, and they said, once we get back, next time we have a recession, we're going to have a depression. And it's going to be a great depression. I never understood that adjective in front of depression. It ought to be crummy depression or bad depression, but it was always great depression. I never quite understood that one. So people weren't buying stocks in the 50s because they thought that another great depression was going to happen. In addition, people were very scared about nuclear warheads. in nuclear war in the 50s. People were building fallout shelters, stocking canned goods. There's something about going to Vermont, building a fallout shelter, putting canned goods in it, that you don't buy Minnesota Mining or you don't buy Eastman Kodak. I mean, the syllogism just doesn't work out, that you're buying lots of water, buying a shotgun, buying frozen food that will stay in the freezer with your own generator, and you're looking at growth stocks. Doesn't seem to work out that way, you know. And I remember in the 50s, I mean, I remember literally in classes, I was in elementary school in the 50s, and they'd come in, they'd have one of these air raid drills. Somebody in a yellow hat would come in, they'd blow a whistle, and you'd get under your desk. Even then I says, I don't think this is going to do a lot of good, you know. But people were worried about a depression in nuclear war in the 50s. And then, I mean, the warheads, they couldn't do much damage back in the 50s. Now one of these Stan countries, you know, these Kakistan and Kazakhstan, all these Stan guys that have spun off these Friedman building spin-offs from the Soviet Union, they didn't lead it. There was a co-deal with somebody else, like Goldman Sachs, and they were on the left side, though. Every one of these little countries has enough warheads to blow the world up 88 times. I mean, who's built a fallout shelter lately? You know, we stopped worrying about it. I mean, there's always something to worry about. In the 50s, it was depression and nuclear war. The 50s was the best decade this century for the stock market, except for the 80s. Only slightly better. The 80s were only slightly better. People didn't expect a lot. We had an okay, it wasn't a great decade. They just didn't expect much. We made it through. And the stock market was terrific. Do you remember when oil went from 4 to 40? Remember that period? Oil went from 4 to 40, and the experts said it was going to go to 100, and all the countries of the world were going to go bankrupt. And then the big banks are going to go bankrupt, and we're going to have a Great Depression, and the stock market's going to go down, and you're going to wind up selling pencils and apples. You know, well, I remember when oil went from 4 to 40, and the experts said it was going to go to 100. Within 2 years, oil was at 14. The experts, now much higher paid at this point, are saying it's going to go to 4, and we're going to have a depression. And people believed it again. You know, I remember when the money supply was growing too fast, and they said we're going to have a depression. Then it was growing too slow. We're going to have a depression. Remember the LDC debt? Remember the LDC debt? All the banks. Our banks were very smart. They lent all their net worth to Zimbabwe and Botswana and Botswana and all these countries, Chile, a lot of countries I can't pronounce. This is Chase Manhattan and Chemical and Manufacturers Hanover. These countries weren't doing so well. Then they were called undeveloped countries or less developed countries. Now you have to call them emerging countries. It's not politically correct to call anybody an undeveloped country. It's like I just found out the other day the term for somebody that's overweight is laterally challenged. You have to say something laterally challenged. But these were LDC debt. They were all going to go bankrupt, and we're going to have a depression. Then the Mideast was going to own the world. Remember that one? The Mideast was going to own the world. They weren't going to buy our bonds, and the market crashing, and we're going to have a depression. Then Japan was going to own the world. Remember that one? Japan was going to have all the assets, and they weren't going to buy our bonds, and we're going to have a depression. Within 3 years, the Nikkei Dow had gone from 40,000 to 16,000. The banking system was in trouble, and people said Japan was going to collapse, and we're going to have a depression. I mean, people had, on their prayer list, at the end of the day, they had eliminate crippled children and Mother Teresa. They're praying for Japan. I mean, you know, it's a country with a 15% savings rate. You know, it's something bizarre. You know, commercial real estate, global warming. You know, and I think as the older you get, the more nervous you get about these things. I think it's very valuable. I think while younger people are better investors, is they're not worried. They haven't heard about all these crises. And they're with children. I think if you don't have any kids, you got to rent some kids for the weekend. You know, get a 7-year-old and ask him if he knows about the money supply, you know, how fast it's growing. Ask him if he knows about the shape of the yield curve is the wrong shape of the yield curve. Or that we're 48.3 months into the economic recovery and the average recovery lasts 52.3 months. You know, ask an 8-year-old if they know about that. 8-year-olds have a very high expectation about the next 20 years. That's what you need to do. The more you get away from 8-year-olds, the more you get away from 11-year-olds, the more you start reading these crazy things you read over the weekend. In fact, from 1955 to 1985, the stock market went up a grand total of 1,000 points, but it was down 800 on Mondays. So it was therefore up 1,800 on non-Mondays. It wasn't an accident. The stock market went down. October the 19th, 87 was a Monday. People over the weekend become economists and portfolio strategists. You know.